Good morning, everyone, and welcome to the European crossover webinar. And bear with me, I'm just making an adjustment on the chart background, so bear with me. I'll just try and do it later. But anyway, let's go and take a look where we're at with the euro, so bear with me. I'd opened up a second page and or an additional page and just trying to get the background to match. So let me just go on and so we're still below 121 right now. Currently, our buy chart support for yesterday was 2051. The low was 2059. That's actually been our buy chart support for a couple of days because it's still going to be 2051, and we're still holding it relatively well. I thought we would have come in a little bit more in light of what had happened with equities, but like I said, it was primarily the Nasdaq. We'll take a look at where we stand here in cable. We popped up above 34, but remember, it's all about that 33.82 level. So we got above 30. We actually closed slightly above 34 yesterday, but remember, it's all about the 33.82. When we, back on, was it Monday, when we went below 33.82, and we had, as remember, I told you, I didn't want to necessarily call this a gravestone doji. It is basically, I just thought the wick was a little bit long, but nonetheless, the doors really opened when they got below 33.82 and hit those stops, and we took that dip. Remember, we came right into this 32.48, and we actually used that as our support, although when we came on air, we were actually below that. Not a whole lot, but I think we're like at 32.35-ish. I said, well, you know, we're just going with the levels. I mean, we're below 32.48, but that's going to be our support. And sure enough, I mean, you know, it was below that at the time, but we saw a pretty good sharp rebound. So that 32.48 really worked out well. We saw the market rebound, even though we're below it. If you were short, you should have been looking to cover because, like I said, even though it was below that, 32.48 was a very key level right there. You can see that. And we saw that rebound. We rallied all the way back up, and then we came back down. And yesterday we closed above 34, but as I said, someone was asking about that. I posted that in the chat room. Said, yeah, as long as it's, you know, above 33, if it slides below 33.82, that's it. And sure enough, here we are sliding below 33.82 again. And, you know, once we broke, you know, we were, if you look at this thing closed, or is it right at 34.06? Actually thought it might even be just a hair bit higher, but 34.06. We closed above 34, but look, we've slipped below and we've gone in all the way, at this point now, 100 pips off of that close. Because once again, you get below 33.82, it shifts the bias. Just looking at levels, that's it. Since you're not even worried about headlines. And we'll take a look at odd. Now, odd's stronger right now, but once again, the bias chart resistance since Monday's been 74.50. And yesterday we got above, made this push higher, but we did not close above 74.50, and that was the bias chart resistance. And here we are right now, currently above 74.50. But one of the reasons we've seen this move higher is the Aussies auctioned off debt, and we actually went into a negative yield, and that really gave a boost. And I think that this can hold. We're speaking to Leon. I think Blake popped in also in the Asian session. It can probably hold for a couple of days, and maybe we might even try and close around here. At the end of the day, it's still above 74.50. They got that extra juice because of that, but I don't think it's something that's going to hold on for long. I don't think it's going to turn around and reverse, but I think we could see a correction. It's just that we got that extra little boost because of that. Also, Blake had posted iron ore futures were at the highest in some time or whatever, and that's also worked in the Aussie's benefit. But this move up in here, it gave it a little bit of extra juice because of that. So we'll see. We may even close possibly above 74.50, but that remains resistance. But I don't think it's going to last for too long. I think we'll kind of stall in here, and then we'll probably see dip back for correction. Still, obviously, bullish. Take a look at the economic data. A lot of UK data. Got GDP a couple hours ago came in at 10.2%, pretty much in line. Industrial output month over month came in a little bit stronger than expected. They're looking for 0.3 gain, got 1.3 gain. Manufacturing output came in also stronger, looking for 0.3 gain also, and they got 1.7%. And construction output pretty much came in line. And goods trade balance. I forgot even how to use this. You can pop up the charts for that month. I'm not going to play with it then. You can pop up, give you the whole thing for, I don't know, however many, 4 years back or something like that. I just haven't pulled around with pulling up the charts off of the graphs off of the data. We do have an Ipsos survey, German Ipsos survey at the top of this next hour, along with French data and UK and Italian and Spanish data at the top of this hour. Ipsos data, you see that, basically consumer sentiment index. Of course, we do have ECB today, later on today. And then we have CPI in the States here at 8:30 Eastern, as well as initial jobless claims. And Cleveland Fed CPI, that'll be much later. Rena says, if you could please speak on the S&P index performance. Thank you. Yeah, we'll take a look over that. Here was the key thing on that, Irina, which is a bit, I wouldn't say surprising, but let's go on and go to the index, which I was going to right now. The Nasdaq was off, I think it was almost 2%, and the S&Ps were down like only 0.8. But we've seen that where one or the others outperformed one, or the Nasdaq was outperforming on the upside, and the S&P finally caught up. And then for I think it was like 2 weeks ago, or maybe 2.5 weeks ago, the S&P was outperforming the Nasdaq. It was holding better. Actually, it was even diverging also. Remember there for about so I just got a sip of water. This was like about 6 weeks ago. Remember, they were kind of like one was outperforming the other one. And then right after that, we got to a point where they were diverging. Like, they may slide, but the S&P didn't slide as much, or vice versa. So the only key thing was that I could, what I saw that was of interest was, the move that we saw. Looking here at the Nasdaq, there's no denying that. And that we've been talking about this, and I was just simply 1 day early. It was kind of funny. I was joking in the chat room. I mean, I made money yesterday, but it was kind of frustrating that actually I was short from the day before, and I hung on. And I hung on because we had this 127% extension. We saw 11 straight days of the triple Qs. And so I did hang on. So pretty glad I hung on. I mean, we came back, and then I covered And a pretty good area actually covered right, fortunately covered right at the bottom, but it happened to turn out to be the 50% back. Covered, yeah, right here, covered. And then you can see we bounced right back up. And then I'm like, well, God, the only thing that kept me, one of the things that helped me is that looking at my exponential moving averages, you can see here in the 30-minute, we had actually shifted into a sell mode during the European session. So you can see here, I go, well, if we come right back up, we're close enough that this could actually generate back to a buy mode. That's what I was like, oh no. And I got lucky. Very, well, not lucky, but I saw this and I actually had a limit at 87. I think it's 87 or 88. The low was 87. I had a limit at 88. And then as soon as I got to like 90, I just flattened it. Didn't even wait for it, but the low was 87. Then we popped all the way right back up. I'm like, wow. And I go, I'm glad I got out, because if we close, look how we came back up. You could almost say that would have been a hammer bottom on that dip. And then we just turn around and start to fade, and we start to fade later on. And but the only frustrating thing, like I said, is I didn't even trade my day, because I'm like, man, I am not going to be early. Second mouse gets the cheese, blah, blah. And here I was one day early. I mean, because I got stuck. I thought we were going to see, I didn't think we were going to see this extent of a move, but I thought we would see a nice down move, probably to about here. And but I thought it was going to happen on Tuesday. It happened on Wednesday, obviously. And then we saw this market basically liquidation. Now, when I say liquidation, I think I've had a pretty good feel on this market overall, to be quite honest with you. Like I said, I just happened to be one day early. I thought we were going to fall, maybe not to this extent, but I thought we were going to fall like right around here. And you can see how this market's been in this. We've had this trend line. We've had this parallel trend line. We extended it just a little bit more to get people overdone. But we saw this slide, but I think this is more about liquidation, but not hardcore liquidation. I think this is just about liquidation, about the people that are long from, let's say, like that part, that have been long for this run. You see, right there. I think those people, it wouldn't like everybody, his brother, sister, uncle, and aunt liquidated from here. I'm sure the people that took profits, but I'm saying is, I think it's more about this move being liquidated. A lot of talk has been that we could see a decent correction, not wholeheartedly, but even here, as they were saying, see a 5% correction. Maybe that would be kind of on the extreme side. Would still be a pretty good correction. I guess it would take us down about here or something, but we would see a pretty good correction, and that you'd want to buy that, or they're talking about buying that into the year end, because then you see this market hold. So you can see, look at the move that we had here, and look at that pretty good sell-off here. So this isn't even of yet. When you look at it, you go, well, that's pretty good sell-off. That isn't even of the magnitude we saw here. My take is, my thoughts are that we'll see this thing come back here. Even if they can come back here, people are still going to sell it, because once again, someone was asking me in the chat room yesterday afternoon, well, what do you think about what if we get positive headlines for the stimulus? And I'm like, can we rally? Yes. Can we rally back up here? No, that's not going to happen. I don't care how positive they are. That's not going to happen unless we got, like I said, what Biden was looking for basically was an FDR style type stimulus, which was a $2.2 trillion, which is what the Democrats were looking at. But anyone who, if we see a rally back, let's say towards 12,469 right here, people are going to use that to get the heck out of Dodge, of whatever the remaining positions are. Like on the way back down here, I actually got long. I forgot where it was. I think it was twice I got long. The last one was really kind of spooky in a way. I think it was right here. I actually was going to get long. I think I was talking about the 420 and then 406 or something. I said, and the market dipped. I think got to 390, and I said, I'm buying it at 389, and I put my limit at 380. And the market had got back above 400. It was kind of dipping back. Maybe they'll kind of film me. And I'm still looking at the screen, and all of a sudden, ding! I got filled, and the market's still trading at 392. And then, boom! Then it slammed down to 360. I saw 374, 368, and then we kind of jumped back up. And at that point, I got out with a small gain because I was thinking, wow, this is getting a little bit overdone here. I don't want to be holding the bag, but we did jump back up. I think we came back up to like 412 or 46 or something like that. I don't remember what it was. It might have been like 412 or something. I'm like, wow, could have held on for longer, but then you can see the rest of the day went lower. Anyway, enough of that. But my point is that anyone who may have bought on this way down, they're stuck in losing positions. And they're probably thinking, oh, well, it's going to come back anyway. So my guess is that any rallies back up here, they would sell into it. That being said, look, we finally have a good look how this market reacted over this last week. You see how we're really just stymied. Let's go here. And this kind of plays for the S&P also. So you can see how we were stuck here last week and we weren't really doggone it. Let's see. What the heck? Doggone it. This thing's screwed up or something. What the hell? Anyway, but here's the deal. We were stuck here in this area and we were basically getting mixed messages here. If you go here, kind of back and forth-ish here. Now we've really broken hard. So now you finally got a real good momentum signal. My guess is that on any moves back up, that now we've got a solid sell signal. They'll gladly sell into. You can see this area right here. They'll gladly sell into that. You see, and before we go in and take that dip back down here. So I think that that's what's happening now. If we look at the S&Ps, take a look there. And this is on the 2-hour chart. Wow, this thing is really holding up very, very well. Obviously, the Nasdaq is more, I don't want to say more tech-oriented. Obviously, it is, but I'm just saying it has a greater weight. Obviously, in the Nasdaq is primarily tech-oriented. If you're looking at the S&Ps, this is interesting. As I said, it did not fall to the same extent that the Nasdaq would. So if you were to look back here, that would be resistance there, 36.86. And actually, I'd almost prefer to see this on a 30-minute. Right there, 36.91. If they could come back up, that's going to be resistance. That comes in right there. That's probably the most even space, which is 36.87.5. So you're talking about an extra 10 handles from here. And you can see here all the touches right here. It doesn't mean you couldn't push it just a hair bit higher, but right there, 36.87 called 36.88 right there is a move back. And then if you look at it on a fib back, mm, 36.87 is a 50% back. That's good. I tell you what, I know the Nasdaq loves a 50% back or forward. You can see here. That's why on this pullback of this move here, I had my limit working at, I think it was like 88 or 89 right there, and the low was 87, and then we saw the snapback all the way. The Nasdaq reacts very, very well to the 50%. It doesn't react as well. It does sometimes to the 61%, but it reacts very, very well. And actually, stocks in general will react very well to a 50% back. Anyway, that being said, let's go on and we'll cover the news. She says, are you bullish or bearish on Nasdaq? No, I'm bearish, but bearish only in the sense that I think we're going to correct back because we saw this. The only thing that was a little bit surprising is we did, but I think it's because we had seen such a hard hit yesterday, is generally what we'll see in Asia. We'll see more follow through. The last time we saw a pretty good pullback, which here, I think here, and I think this was Asia here pulling back. So usually when we see a pretty good pullback, we see even further follow through in Asia, and we didn't. But I guess because it's been so bullish, but this was actually, there was some decent support I talked about in Nasdaq 2-hour chart higher. And I know that when we took this dip, I think Jane was looking for 10,317, which it did come. And actually this level, this pink line, which already had it in place, was even below that, but it actually held it right there. And you can see we held it again. So yeah, if you're looking for bullish at this moment, yeah, I would looking for it to come back up. And the initial test here at 373, but this area is pretty decent, it's fairly decent right here, which is 406. And if you look at it on the 2-hour chart, we have 406. It was one of the areas that I thought was going to hold, and I think it did try to. Yeah, remember I got I talked about the market dipping, and I even posted in the room. I said, "Hey, I'm going long. I got a bid at 389." Then I lowered it down to 380, and I think I might have even pushed it to 378 or 379. I'm not sure. So I said maybe they may wash it out. And remember, I told you that I didn't even see it on the screen. Never saw it before. Is that it? Just, the market was still traded at 392, and I heard ding, and then all of a sudden the screen for the fills. I see that thing going crazy, and then the chart just drops down to 374. Then it drops down to 368. And but anyway, nonetheless, yeah, this 406 you see here. This area is going to be that'll be a good area for them to bounce up against. But the market could come back a little bit here. It would be right there at 425. I think that'd be a pretty good sell area. But it's not that I'm all of a sudden I've turned massively bearish. No, I'm thinking is that we're going to still dip some more. This trend line right here, which confluences 12,237, I think that's got to be visited. And it's only from a valuation standpoint, is that from where we are chart wise and the way we broke, they have to do a little bit more homework before you can find some more solid buying. So generally, we see a hard break like this, we might rally a little bit, but we got to truly retest this. So they'll come back here, test it, then we'll see what we're made of it. My guess is we'll come back down to this trend line here. So that's the deal there. Bear with me. Oh, you're welcome. Bear with me. Let's go move back into the charts here. Pull up the news. Yeah, the frustrating is I don't want to say I had it nailed, but I basically had the direction what I thought I was going to move. Although I didn't think it was even going to be that bit of a magnitude. Although I thought that we were going to see a decent sell, but the frustrating thing was I didn't even trade one day, thinking I'm waiting. And then here on Tuesday, I stepped in and I said I didn't want to be early. And still I was early the one day. But if you remember, it's been our analysis of the Fang Man. Remember, I'm saying is that the Nasdaq is at all-time highs, but the only ones that were all-time highs was Tesla and Google. The others they moved higher, but they weren't at all-time highs. And that was one of the things I was hanging my hat on. But anyway, Australian dollar near a 2.5-year top. New Zealand dollar stumbles. The Australian dollar stayed near a 2.5-year peak on Thursday on strong iron ore prices, though overall sentiment was dampened by the elevated surrounding Brexit trade talks and ongoing political wrangling over U.S. stimulus package. The Aussie dollar was trapped in a narrow range to be last at 74.58, going as high as 74.85 on Wednesday. The Aussie is up more than 4% so far for the year, led by its relative success in curbing the coronavirus pandemic, stronger than expected macroeconomic data recently, and sturdy gains in the prices paid for iron ore, the number one export earner. If you're trading commodities from the iron ore's bullish trade, you need to, like the Aussie, which is firing on all cylinders these days, said Stephen Ennis. Dalian iron ore at a record high last week, boosted by consumer China's robust demand for steel-making ingredient and supply concerns. The Aussie's rise was, however, capped by disappointing news from the overseas with the lack of progress in U.S. fiscal stimulus and Brexit trade negotiations. In the U.S., Congress has continued talks on additional economic stimulus, with House lawmakers voting to pass a one-week stoppage funding gap to give more time for talks. Meanwhile, PM Boris Johnson warned the European Union on Wednesday it must scrap demands that he says are unacceptable if there is to be a Brexit trade deal to avoid a turbulent breakup in 3 weeks. The New Zealand dollar was quoted at 70.21 after hitting a 2018 high of 71.24 last week. Domestic data was less supportive, with electronic card retail sales rising to more than 0.1% in November, suggesting policy will have to remain accommodative to fuel consumer spending. New Zealand government bonds rose, sending yields about 3 basis points lower at the long end of the curve. Let's see. Yeah, Raina was saying she lost an opportunity in the Nasdaq. The only thing I guess I can, as I said, I was telling the people in the chat room that it was late in the afternoon. The only thing I have to say, I really should be grateful. I am grateful. I was short and the market went up against me, which was Tuesday afternoon, and we pushed higher into the early Asian session. But I hung on, and I hung on because that 127% extension, plus what we'd been talking about in the room, was I'm like, wow, the only ones that are record highs are Google and Tesla, and the others haven't. So I hung on. So if not, I would have taken a decent little loss, but I ended up hanging on. So I am happy about that overall. So you got to be grateful. Euro stable ahead of ECB stimulus, and pound dips on Brexit fears. The euro stood its ground on Thursday ahead of the European Central Bank unveiling fresh stimulus measures, while sterling fell after the post-Brexit talks were extended until the weekend in pursuit of an ever-elusive breakthrough. ECB officials have made it clear in recent weeks that the bigger pandemic emergency purchase program and more subsidized long-term loans to banks will form the backbone of the policy measures. Economists polled by Reuters expect the 1.35 trillion euro PEPP to expand by at least 500 billion euros and its duration expanded by 6 months to the end of 2022. These adjustments are unlikely to have any significant effect on the euro, even if the adjustments are going to be a little bit more produced than the market expects. Another potential surprise would be the ECB's Christine Lagarde taking an equally unexpected bazooka strong stance against recent rise of the euro. Against the pound, the euro rose 0.7 to 90.80 pence, while sterling sustained similar losses against the dollar, retreating to 33.17. British currency fell overnight after PM Johnson and the European Council Commission President Ursula von der Leyen gave negotiators until the end of the weekend to decide if a trade pact can be struck after failing to bridge the gaps themselves. There's still clearly some scope to keep talking, significant points of difference that remain. Dominic Robb says, Bank of England Governor Andrew Bailey has said no deal Brexit would cause longer-term damage to Britain's economy than the COVID-19 pandemic, and the impact of the change might be felt for decades. And with that, let's go on and move into the analysis. We're kind of poking around today. Amira says, look at platinum. And Amira, I tell you what, we'll look at the platinum right now. We'll get this taken care of for you. Hang on. Bear with me. When we talked about this, remember how the way this market had broken out, and we said if it got above this area, we could really start to launch. We talked about that like about 2 weeks ago, I think it was, when it started to come up, and we're seeing initially, and I think we covered this a couple of days ago, and we saw this dip, and we're saying as long as we can hold into this area right here, which was this pullback, and we've actually dipped further. This is this level when we look at just the bodies right here And this is, I wouldn't say it's a thinly traded market. It's not thin, but you can see it kind of darts around all over the place. The key thing, the guy on the squawk's kind of squawking in my ear. But anyway, the key thing right here you're looking at right here is going to be this 991, or call it 990. Because you can see with the body we closed here, okay? When we broke above it, what did we come back down here? You can see here, it held at the 990. We kind of danced on both sides, and once we broke beyond 990, it opened the door for us to come lower. We rallied back to 990. We dipped back down here. We rallied all the way up to 990. We can't, so you can see the importance of 990. So this is basically on a closing basis. This is the demarcation line, and this is where the risk is, where the market may want to come back here and test this area here, and see if this 990. As long as I can hold, there's still a buy, although it's paring back. But you look for buyers to emerge and shorts to look to cover around this 990 area here. But we did see this break yesterday, which is bearish. You can see they even closed below the previous level here. Really opens the door for them to come to 990, whether we do it today, tomorrow, but that's going to be the key level. And you can see once again the significance. The market rallies and closes right at 990. We dip all the way back down. We come back. We close just a hair over 990, close at 993. We extend it even further, and then the market comes back down and closes sub 990. We dip back down here to 963. We come back, and like I said, the next day we close above it. Looks like it's going to be okay, but we turn around and give it all back, which is, once again, as I'm saying, is this is the way this market is reacting. It's, you would think it would have more significance there. We come back, and you can see we press close to 990, full back, and then finally we come back to 990. We fail, and look how much we come back. We make one more feeble attempt, fall back to new lows, make it all the way back to 990 and fall back down. So you can see the significance and why I think we'll have to come back and test 990. And let's go and take a look at so the euro paired back on Wednesday, going sub 21 cents, 2100 with a low of 2059 as U.S. equity slid. The pair slightly recovered before the end of the day. Resistance for Thursday will be 2136 with support at 2004. So we're giving some room in light of the way that it pulled back. I'm not really taking as much of a big deal with the ECB, although there can be some impact, which you even saw the story. They're not looking for a whole lot to happen overall that would impact it. I'm just sticking with the levels. Essentially, that's it. That's all I'm just going with. There's just so many cross currents. I think that's what you have to hang your hat on. The 2051 is so close. We've had it in place since Monday. I think since Monday. I know for the last couple of days, but my thinking is if we're going to break them lower, then it could come down to 2004. So there we go. Once again, just going with the levels. Looking at cable. Cable closed slightly above 34, even retaining the bullishness mode while above 33.82. Remember I said that's working like a pivot. Resistance on Thursday will be 34.53 with support at 32.78. Going to the Aussie dollar. Okay, the Aussie pushed above the highs on Wednesday before closing subs 74.50, which is the bias chart. Resistance support will be 73.72 with the resistance at 74.50. So 73.72. I'm leaving it there because that's an important level, that 74.50, and it was on a weekly level. So the mark will have to prove itself. It's doing it right now, and I think this move might hang for a couple of days, maybe 3 days, but we'll see where it closes. That's going to be the key. Moving on to the Kiwi dollar. The Kiwi posted a gravestone doji on Wednesday as U.S. equity slid back. Resistance on Thursday will be 70.64 with support at 69.45. On to the dollar CAD. Dollar CAD posted a hammer bottom as U.S. equity slid back. Support will be 27.88 with resistance at 28.68. And I'm not spending too much time on this part. We've already covered the basic analysis on things and what we're looking at. So now it's just giving the levels, and essentially that's it. So the dollar peso held the lows as equities paired back. Support on Thursday will be 19.76 with resistance at 19.98. And the dollar yen. Dollar yen posted a minor gain amidst the stock slide in U.S. equities. Resistance on Thursday will be 461 with support at 392. And on to the dollar index. So the dollar index posted a minor gain on Wednesday despite the U.S. equity slide. Resistance will be 91.42 with support at 90.68. So resistance remains the same. On to the cross rates. Kiwi still remaining pretty strong here. And we had 73.71 as our resistance. That's going to stay the same. No changes here. We're just basically stuck in this range and press it on either side. Onto the euro pound. We have started pressing up higher here again. This is going to be the resistance right there. This body coming across, see right there? That's going to be 91.10. And like I said, this whole Brexit talk, I mean, leaves you going, swinging backwards and forwards. This body right here, that's going to be support, 9018. Well, we have 9017. We can leave it there. Euro odd. Oh, wow, we're back here at that support. That's going to be the support right there. We'll give it a little bit of room to get some stops. So we'll say 61.38. On the upside, this body right there, if they were to come back, 62.46 for today. And into the Euro New Zealand. Well, we dip back and posted this hammer. Resistance is going to be right there in that body, which is 72.11. And support this lower body right there coming across, 71.24. Onto the Aussie yen. Of course, looking pretty strong with the Aussie. Resistance is going to be the high right there, which is 78.42. With support now coming into the close of this body. That's a long ways off, but that's what it is, 77.41. Then to the guppy. Definitely a bit of a pair back. This is going to be support here. This bar, the open, which is 38.59. With resistance, if we were to challenge it down, it would be that close right there, which is 39.97. Well, 39.98 Mox Nix. And lastly, the sterling odd. Boy, we've really come off quite a bit. And then, of course, with the odd appreciating, support's going to come into right to the extreme is right to the bottom. Got some pretty good touches coming on. We can actually almost split the difference here and say it's going to be 77.25. With resistance, that low bar here, 79.40. Okay, and there's our bias chart today, and we'll put that in the chat room. And thanks for joining us here in the European Crossover webinar.